All right, this is the Consumer Cyclical Sector Analysis, July 2, 2022. GPC is the um, sector, no, I'm sorry. This is the company that the portfolio is calling for. IPG is, I have to go back and look. Okay, IPG is the sector leading MVP, tied with International Paper. I think I said this before, I'll say it again. The consumer cyclical sector is really spread out. There is no real sector leading MVP, but IPG shows up in a bunch of M score portfolios. And so that's why we're looking at it there. And then Best Buy also shows up in a lot of the M score uh, portfolios as well. All right. So let's take a look at these. I'll say right away, I'm very partial to GPC. Been following them for a long time. Really great company, and I think they'll do really well in the environment that we're in. First things first, dividend is really low. I think that has a lot to do with the current price. IPG, much larger dividend. PEs, um, uh, really kind of hard to compare, honestly. GPC and Best Buy, I think, are somewhat comparable, but IPG, not at all. That being said, GPC's PE is way above where Best Buy is, even compared to their 5 year highs. And so I think that says a lot about what the market thinks about Best Buy, right? So even though, like I said, they are uh, part of a lot of those better performing portfolios, I don't think that Best Buy is necessarily the best performing company in those portfolios. Purchase price of 111, current price of 66. So I think that that says a lot. GPC purchase price 125, current price 133. That almost takes Best Buy, almost out of the running. Honestly, IPG has lost a little bit, but again, the outsized dividend may have made up for it in the performance of those particular portfolios. All right, take a look at net profit. Again, this won't be necessarily comparable, but it is important to know that IPG has a higher net profit, and GPC and Best Buy are about the same. Again, these numbers do are included in the M score, which again, IPG is a large part of those portfolios. All right, return on assets. Best Buy beats out the rest of these guys. Not a lot to say there. Way more cash on hand for IPG and Best Buy. Again, this may have something to do, honestly, with the way the company is ran, but either way, these numbers still get included in that M score. And so that's the reason why we may see GPC with a lower M score. All right, cash over debt. Looks like Best Buy has way more cash than they do debt. That is not the case for GPC. Looks like there's a lot of debt on the books, even compared to cash per share. All right. Um, One thing that is certain, though, again, I said I was partial to GPC, and I guess the rest of the market is too, because only 0.75% is short compared to Best Buy and IPG. We're looking at almost 4% short. So clearly, the market thinks that GPC is going to perform much better than the rest of these guys. And at this point, I am, I think I agree. All right, the alpha. Interestingly, we know that the alpha portfolios have not performed very well. All three of these guys, just because of the cyclical nature, I think, of their business, all have fairly high alphas, though they're not positive. They are high compared to, I think, the rest of the basket of stocks. All right, up moves. Again, 40% is kind of the higher end, 34 for IPG. The rest of the guys are sort of in line. Same thing with the down moves. GPC is kind of better there. Just saying that again, when there's a lot of buying and selling going on. GPC tends to perform a little better in under pressure. All right, beta, IPG, better beta, but again, these guys are sort of in line with each other, so not a lot of difference there. I mean, when you look at point one versus point two, that is quite a difference. But again, beta portfolios not performing as well, so not so concerned about that. Same thing with the monthly return. Again, just the cyclical nature. I think all these are going to be fairly high. Volatility, of course, we want as little volatility as possible. But when, again, the market is doing well, that volatility comes in handy. And these guys are all about the same. And then M-score, we know that Best Buy beats out everyone else there. IPG, I think, is a better management score company, but it has all those other attributes thrown in that makes those M-score portfolios perform so well. In this case, I think this is a very easy decision. All of these guys are about the same in every category. The big difference here will be not only the cash on hand, which I think really helps in this environment, but the dividend. And so while I am cautious of getting into a stock with a lower dividend and questionable performance, let's say, right? I think in this environment, I think that GPC, not only by the numbers, but also just generally speaking, the business that they're in is a better bet, even though these other guys will tend to outperform when the market is doing better. And because of that management score, historically may perform better. But we have to go with GPC. Really excited to get into the company, following them for a long time. It'll be a lot of fun getting into the details of their business.